Perfect. So we are pleased to have Christy Weiss, Specialized PSE Consultant, joining us on today's webinar. During this hour, Christy will share her insights on what you need to know about provincial sales tax. Christy provides her clients with PST consulting and bookkeeping services. Her background includes a bachelor's degree in business administration with a major in accounting, as well as almost 4 years of experience as a PST auditor for the Ministry of Finance. Christy enjoys helping people. Her new role provides her with the opportunity to assist clients in the success of their respective businesses. The tax role she provides helps companies ensure compliance with the rules and regulations of the Saskatchewan Ministry of Finance. Her bookkeeping service ensures that clients' records are accurate and up to date. Both of her roles provides her clients with peace of mind. So thank you, Christy, for joining us today. So Christy, please start whenever you're ready.
Thank you, Jackie. Hello, I am Christy Weiss, and I am going to be putting on the webinar today, Provincial Sales Tax, What You Need to Know. So I will just say that when I refer to PST through this seminar or webinar, I will be just referring to Saskatchewan tax. If there's any other province I refer to, I will specify, but otherwise, if I'm saying PST, I am only meaning Saskatchewan. One thing I need to really work on is slowing down when I talk. I tend to talk very fast most of the time, so I'm going to try my hardest, and I'm also going to ask you to basically hold me to that. If I start talking too fast, please just write it in the chat box, and I will try to slow down. Okay, so a little bit about me. I know that Jackie just did a great introduction, and I knew there'd be an introduction, but I forgot. So here we go. I obtained my Bachelor of Business Administration from the U of R in 2011, and I did major in accounting there. And as Jackie had stated, I did move back to Saskatoon to work with the Ministry of Finance in June 2013. March of this year, I decided to start my own business. I left my position so I could provide PST consulting and bookkeeping services to my clients. The big part of that is my goal was to be more proactive rather than reactive about the PST education. When I audited, I had an opportunity to teach people. However, it wasn't until after I had to provide a bill. So I was hoping on this side I could provide more proactive education, hence this webinar. So a quick agenda for today. We're going to go through what PST is, how PST applies to sales and services, PST on consumer goods, and we'll get into further explanation once we get to that slide. I put in a did you know slide. It's just some points about Saskatchewan PST, and we'll also follow that up with any questions you may have. I'm providing two examples in this webinar, and that will be on a hair salon and a restaurant. So we can kind of see how PST applies to those two industries, as well as what a PST audit assessment might look like in those cases. And I will finish it with what is PST consulting. So what can I bring to the table for you and your business? So what is PST? PST is a consumption tax. So if you are using product and services within Saskatchewan, they can be subject to tax on the basis that you are consuming them here. This applies to many sales and services provided by businesses in the province, and even when we're buying things from out of the province, which we will get into further. It applies to many goods and services purchased for our own use by businesses. So when we buy things to run our business, that's a consumer good, and a lot of those goods and services are also taxable. So let's look at PST on the sales and services side, what you may be providing clients. So PST is on many products, including what that list has listed. Equipment, the cleaning supplies, stationery, furniture, tools. Most products do have tax on them. With the equipment, the reason I put rented or purchased in brackets is because the rules change whether you're renting equipment or if you've purchased equipment. For example, if you purchase equipment and you have it delivered from point A to point B, both points being in Saskatchewan, so from one Saskatchewan location to another Saskatchewan location, that purchase, the transportation is tax exempt. However, if you rent a piece of equipment and it is delivered from point A to point B, both points being in Saskatchewan, that is part of the rental agreement, is the transportation makes up part of the rental agreement, therefore it becomes taxable in that case. So rental equipment obviously has different rules than purchasing equipment. And if you do want more information on rental equipment, of course I'd be happy to help you. But if you wanted a quick reference for your own purposes, PST Bulletin 72 has additional information on rental equipment. Another point I wanted to make about the products that are taxable are, I wanted to point out that used goods are taxable. I had hit several audits in the past where there was a misinterpretation that used goods were not taxable. They are in fact taxable. If a used good is purchased by a business, the full amount of that purchased good, the full cost of it, is subject to tax. However, if you are buying a piece of equipment, a piece of furniture, whatever the case is, if you're buying that for personal use, the first $300 is exempt. So it's $300 per item is exempt of tax if you're buying a used good for personal use. Now this excludes vehicles. So vehicles is a different situation. If you do need more information on used goods, again, I'd be happy to help you. If you want just quick reference, PST Bulletin 58 will give you more information on used goods. Okay, and just to kind of give you a quick reference, because I did specify many products, not all products are subject to tax. Just a small example of what isn't taxable would be prescription drugs, diapers, most Energy Star appliances are not subject to tax. And if you need a complete list of if you're considering buying different appliances or if you need appliances for whatever your business may be, you can look at PST Bulletin 69. That provides a link to where you can find more information on what exact appliances fall under this category of tax exemption. And when I say tax exemption, I am specifically speaking of PST. So the select services, some services are taxable and some services are not. This often tends to be a confusing point for people. There's engineering services, accounting and bookkeeping, services to real property, commercial business cleaning services, and advertising services. These services can be taxable. With engineering, it has been determined by the Ministry of Finance that engineering is about 30% of the services engineers provide is taxable. So when you are taxed on engineering services, you are going to be taxed on 30% of the entire invoice for the service. So when I was auditing, it was 5% for PST. I would see engineering invoices that showed 30% of 5%, or I would see 1.5% to symbolize the 30% of 5%. Of course, now it would be 6%, but engineering is definitely one that doesn't fall in the category of saying the whole thing is taxable. So it's just something to keep in mind, another little difference according to industry. Accounting and bookkeeping, if you have either of these, you do pay tax on those. Services to real property, this is a change that came about April 1st, after the new budget was released. It used to be that your contractor was seen as the final user of the product or good or service, well, good in this case, for real property. So it was up to the contractor at that time to pay the tax on the goods. However, it has changed. April 1st, these services to real property are taxable. Real property are things that are fixed, permanently affixed to the land or to a building. It's basically meant to be a permanent structure. So this was if you hired someone to put new windows in your home. You're not taking those windows with you. If you move, that's a real property contract. If you hire someone to paint your house, that is a permanent fixture. They're not going to chip the paint off and take it with them if they sell the house. That is a real property contract. So they used to be taxable to the contractor. As of April 1st, going forward with the new law, with the new rules and regulations, services of real property, the full retail contract value is taxable. Can someone give me some feedback on how this is going for explanation-wise? Is this a good speed for everyone? Okay, perfect. So I also wanted to comment on the commercial building cleaning services. Cleaning services is another one that has the if, ands, or buts rules. Commercial building cleaning services. If you are being hired, sorry, I just saw this question. I'm going to backtrack just a little bit to the real property. Do landscaping services fall into real property services? They do, but landscaping also has separate rules as well. Landscaping services were exempt before, and they continue to be exempt. Okay, so does that answer your question, Natalie? As far as commercial building cleaning services go, as if you're cleaning offices, office buildings, anything that is of a commercial use, those cleaning services are taxable. However, if you are cleaning a personal home, or if you are cleaning restoration or providing restoration services, so if you're cleaning personal homes or you are part of the cleanup crew after a flood or after a fire, those restoration services, those cleaning services are tax exempt. Only the commercial building cleaning services are taxable. Advertising is another slightly touchy one. Advertising is taxable if the advertising company is providing you a service of creating, whether it be a logo or creating an advertisement or creating a brand. Those items are taxable. If you are only hiring an advertising company to place an advertisement that you have created, so they're only placing it in the media, so they're placing it on television, they're placing it on Facebook, whatever the case may be, that placement is tax exempt. The portion of advertising that you paid to have your logo created, to have the advertisement created, that is taxable. Are we doing okay here, everyone? What about fitness and recreational services? Question. Here's the next slide. Fitness and wellness centers are tax exempt. So when you have a gym membership, when you're taking gym class membership, when you're taking classes such as fitness classes, those are tax exempt. Tattooing services are tax exempt. And so are things like daycare services or DJ services. These services are tax exempt. One thing I wanted to let you know about too is service enterprises is explained further on PST Bulletin number 46. That one provides more explanation and more of a list of what is taxable and what isn't taxable. Now, I know I have consulting services under non-taxable and taxable, but there's a reason. There are some consulting services that are not taxable, and that includes things like your management, business plan development, communication plans, the special events coordination. These are things where it's almost like it's planning something in advance. It's planning for change. However, you don't have um, concrete product from it. Massage therapy again would be, I believe that one is in the non-taxable, because that would be like a healthcare service, and those fall under the non-taxable um, services. I hope that answers your question, Marjorie. Let me know if it does not. Taxable services, as far as the select consulting services on the taxable side, we're discussing consulting services that are included in the sale of a taxable good. So you have a taxable good that you purchased, and the consulting services are included with that sale because you need to learn how to use something, or you need to learn how to use a certain product, and there's only certain ways to use it. The second one was the computer consulting relating to delivery of taxable computer services. So I'm going to use those two together for an example. You've hired a computer company, software company. They are going to create custom software for your business. So they've created the custom software in the parameters that you've specified. Now it is ready to go. So you pay tax on the custom software. Now there's consulting services because they are going to teach you how to use that taxable good. They're going to teach you how to use the the computer software for your benefit. So with that, then that way the consulting service is taxable along with the software service. I hope that made sense. And legal consulting services are also like a taxable consulting service. You've gone in for legal advice and you pay tax on an already very large bill. So as far as dry cleaning services, I just want to put that one other taxable service on the list. Again, I know taxable services can be confusing. Do remember the service enterprises are explained on PST Bulletin 46. And again, I'd be very happy to help anyone in any of these industries that would want extra help and attention for their particular business. And that is something important about PST Consulting. There is industry-specific rules, but there's always a little bit of differences between one type of business or one business and another, even in the same industry, and that's what we would focus on. And I think a good representation of that was mentioning the equipment before. It's rental versus purchase. And if your company is doing both, you need to understand rules for both. Otherwise, in the case of an audit, you might be the one who needs to basically pay for the misunderstanding. So good to go on. So PST on consumer goods. So consumer goods are products and equipment, furniture, the supplies, things that you use to run your own business. So I buy furniture, I buy equipment, I need to buy supplies on a regular basis. I need to pay tax on all of that to run my business. So there's a few other considerations that go along with just basically going out, buying yourself a computer, and paying the tax at source, or paying the tax to whoever you bought it from, whether it be Staples, Future Shop, or whatever the case may be. So there's manufactured goods for own use. These are still taxable to the manufacturer. These rules for manufactured goods have changed since April 1st. They've been big changes. I am actually going to be just on a side note, I will be conducting a separate seminar for manufactured goods and contracting, the before and after changes, after the big change of the budget changes that have come about on April 1st. I will be having a conference on this, and it will be on October 10th in the evening. You can find out about the event on eventbrite.com. I will be posting it on Facebook. And I also will be posting it on my own website. And I have that contact information at the end. So we're going to use this as an example. Manufactured goods for own use are taxable to the manufacturer. Manufactured goods for resale are taxable to the customer. So say you are manufacturing supplying and installing kitchen cabinets. You manufacture them at your own warehouse, and then you take them out and you install them into customers' houses. With the old rules, that would have meant you had to pay tax on your direct labor, direct materials, and your manufacturing overhead, which includes a lot of things. Manufacturing overhead includes everything that went into the manufacturing. So it went as far as employee salaries, if you used power for it, if you had utilities go into it, if you had administration costs, all of that was added into it. And that was added into all the jobs you did, because before, whether you did it for yourself or for a customer, you had to pay tax on all of the materials and supplies and labor and, again, the manufacturing overhead. Now, the only time you have to pay for the manufacturing overhead and the supplies and materials as well as the labor is when you're manufacturing for your own use. So you do kitchen cabinets. You decided to build a new office building for your employees to operate the business. You manufactured these kitchen cabinets and you installed them into your new office building. Because that's for your own use, you still have to pay tax. You have to self-assess your tax on your direct labor, direct materials, and manufacturing overhead. I won't get into it at this point or in this webinar, but there are quite a few ways to calculate that if exact or very, very close records have not been kept. There's different ways of calculating what tax to remit on that. So because you're the manufacturer and you install them and it's for your own use, that becomes taxable to you. If you manufacture it and sell it to a customer, then it becomes taxable to the customer on the full value. And I hope that made sense. I may have explained that one a little too long. Purchasing goods from out of province, self-assessing may be required. The reason I say that self-assessing may be required is because if you're purchasing goods from out of province, some out of province companies are registered with the ministry to collect tax on behalf of our ministry. Some companies will do that because they have maybe possibly a lot of clients or customers in Saskatchewan, and they can be registered with us when they don't have a location here. However, most are not. You'll find if you purchase goods from things like Amazon, or if you purchase from Vistaprint, these particular companies are not registered with the ministry. Therefore, when you buy goods from them, you have to self-assess the PST because they will not charge the PST to you. So if I bought a desk, say on Amazon, and I paid $1,000 for it, well, I owe $60 PST. Amazon is not going to charge me that. So what I'll do is I will self-assess the tax, $60 PST, and I will remit it as a consumer tax. So there is a line for that on your PST remittance form, and it's underneath your sales and the tax collections from sales. The other point I wanted to make on consumer goods are direct agents. Direct agents are tax exempt. This is one of the few things that haven't changed since April 1st. Direct agents are those materials and supplies that come into contact with the final product, and they change the final product. However, they are not incorporated into the final product. So you'll find with direct agents, with our example of kitchen cabinets, that manufacturer, he used sandpaper to be able to smooth down his kitchen cabinets. Because that sandpaper changed the final product, but it did not become incorporated into the final product, it is a direct agent. Those are tax exempt. And I will be more explaining the direct agents aspect on the seminar I'll be giving, but as for right now, I just wanted to give you a quick overview. If you have additional questions on direct agents, again, I'd be happy to help you. If you just want a quick explanation as well, there is further information available on PST 39. So PST Bulletin 39 is on direct agents, and since we're still on this page, manufacturing contractors is explained a little more on PST number 37. And does anyone have any questions? Are we good to go? Okay. So here's the did you knows. There's the one question of, did you know that all companies with Saskatchewan locations are required to be registered with the Ministry of Finance? So what that means is, even if a head office is in another location, if they have a location in Saskatchewan, they need to be registered with the Ministry of Finance. So that even includes whether they have a storefront here or whether they have an oil rig here. If they have a Saskatchewan location, you have to be registered with the ministry if you're running a business. Companies who sell products and services to Saskatchewan residents are not required to be registered if they do not have a physical presence within the province. And we slightly discussed this on the last slide. This would be an example of what Amazon does and what Vistaprint does. We can all go onto our computers, we can order things from out of the province. They do not have Saskatchewan locations, so they do not need to be registered. Some of them still are registered, simply because if they have a lot of clients or customers in Saskatchewan, it can be a benefit for the customers or clients, so they will become registered to make it basically easier for their customers. And all companies with Saskatchewan operations have the potential to be audited. So whether or not a Saskatchewan operation is registered, they still have potential to be audited. If the Ministry of Finance comes across a company that did not register, however, is located in Saskatchewan, you can still be subject to an audit. And audit assessments are always subject to penalties and interest. And that's a big reason why I got into PST consulting. It's hard to, well, it's not hard, but it's definitely something where I'd rather be proactive than reactive with this education. There are a lot of rules out there, and like I said, there's something where definitely something to be said for having someone actually look at your business, your particular business. So yes, you may be in the industry of, like we said, renting equipment, but you may also be selling equipment, and you need to know all angles. A question was just posted, do home businesses need to be registered as well? Yes, home businesses do need to be registered as well. And when you do register, they will give you you will get a letter in the mail. It'll give you a PST number and tell you how often you are required to basically, sorry, I'm drawing a blank for a second here, how often you have to report back. So you're either put on a monthly remittance or a quarterly remittance or an annual remittance. If you're a home business and you're not doing a lot of business, or your numbers aren't really big, or you're not collecting tax, if you don't have to collect tax on whatever you're providing, you're likely only going to be doing it once a year, and it may be a nil, but you still do need to be registered. I'm giving some information again at the end of this seminar, and it will give you basically where to start to go get the application form. And Darlene, if you need, you can also contact me at the end. My contact information will be up. If you wanted to email me, I can email you a copy of that form that you can either scan and email in or fax in, or whatever the case may be, however you want to register. Okay, so we're going to do a couple of examples. Example one is a hair salon. So for this, I'm going to assume that we've made $300,000 in styling sales this year. So I've been told that that's probably a 5-chair salon. I'm not sure. I just kind of pulled these numbers out. So if they are not very accurate, just bear with me. So we're assuming that within this year, we did $300,000 of styling sales, and we did $100,000 of product sales. And those products were purchased for $40,000, where we sold them for $100,000. So the PST implications on this are the styling services are sold to customers exempt of PST. So hairstyling, you go to the salons, those services are exempt of PST. Taxes collected on the selling price of the products, and the markup is remitted, because in this situation we're looking at it being tax paid products. I'm going to hop a little bit around for illustration purposes and just to keep things on a basic level, so we can discuss things further if they need to be discussed further. So this is the scenario we're looking at. Let's go to the next slide. So our scenario 1, PST was not collected on product sales, and the product was purchased tax-free by the salon. So we're assuming that the salon owner, she had to go to Calgary for a quick trip, and she ended up picking a product there. Well, she would have bought a tax. So if she came back and she didn't realize that she had to charge tax on it. Okay, well, she made $100,000, and she's charging the 6%, and we're assessing on the 6%, or the ministry is assessing on the 6%. And so there's a $6,000 assessment. The penalty on that is 10%. So that's a $600 penalty. Interest, it varies. For illustration purposes, I'm just going to make it the same as a penalty, but the assessment for that amount would be $7,200. And keep in mind, this is an example for 1 year. Most audits are basically taken, the audit period, standard audit period, is 2 years plus current. And for capital assets, so the big things you buy, the equipment, the furniture, things that you're going to be depreciating over time, those items, they'll go back, the standard of going back is 3 years plus current. And if there is an issue, a big underlying issue found, the ministry can go back even further for that. So I'm just going to bring up one other example while we're looking at this. The assessment scary. Now, if this does not happen often, but I do want to bring it up, is if someone had collected that $6,000 but did not remit it to the ministry, the penalty is no longer 10%, it's 25%. So it's very important to remit what you collect. And as far as interest being varied for illustration purposes, the reason that I had to put that this disclaimer in is because interest accumulates from the date that either the sale occurred or that you bought an item, from that date to the date that the audit is closed. That for that entire time, that item is collecting interest. So these can get quite large quite quickly. Okay, so if we go to scenario 2, PST was collected at all the product sales, and as we've mentioned before, on the first page of the example 1, where it mentioned that the product sales were tax paid on $40,000. That's what we're going to go back to on this. PST was collected on all product sales, and they were tax paid inventory. But the hair salon that collected the the $6,000 tax remitted it all, even though it was a tax paid inventory. So in this case, what we find is there's going to be a refund on this portion. The reason being, tax collections of $6,000 were remitted. After the $2,400 on the $40,000 sale, or on the $40,000 purchase, the tax had already been paid on that part. So the only thing that was actually due was the markup, because you had already paid the $2,400 tax. So your refund on this portion of an audit would be the $6,000 for all the tax collections, minus the $3,600 that was actually due. You get the money back on the tax paid on the products you sold. Does anyone have any questions on that? We're good? Okay. So we're going to do another example. This time it'll be with a restaurant. So restaurant has $500,000 in food sales. Similar to GST, the question was just asked, that sounds similar to GST, correct? Does the ministry pay interest back? If there is a refund owing at the end, the ministry will pay interest back. And if they pay interest back, it is at a lower rate than what they would charge. So yes, they will pay it back. As far as similar to GST, is that what you're talking about? Is if you were to get a refund? Okay, perfect. All right, sounds good. So we'll go on to example 2 then for the restaurant. So $500,000 in food sales for the year. And again, this example is going to be for 1 year. Keep in mind that if an audit were to occur, the audit period will be longer than 1 year. And say you purchased new tables for the restaurant for $50,000 from Calgary. You bought them tax-free. The company was not registered with our ministry. And you also had them delivered to the restaurant for $5,000. So the PST implications of this: you remit tax on all the sales, and I know that this rule is much more recent than a year. The change for restaurants had just come about as well. Oh, sorry, I'm just going to take 1 second here. PST doesn't give refunds. We always are told to take an internal credit. For this, we're talking more on an audit basis. So if I'm auditing you and if I were auditing you when I was part of the ministry, basically they would deduct that portion. So if it's taking an internal credit, yes, you do that on a regular basis, but not in an audit situation. Okay, perfect. So, all right, so we purchased new tables for $50,000 from Calgary, and the delivery to the restaurant was $5,000. So what do we do with this? We have to remit tax collections on all the sales, and we have to self-assess PST on the value of the tables, including all fees except the GST. So what the ministry calls this is the laid down cost. So you're going to self-assess PST on the laid down cost. That's all the fees to get these assets from one point to your point in Saskatchewan and have them ready for operation. So that's what laid down costs would refer to. And then we remit the tax as consumption tax, as we discussed before on the PST remittance form. So scenario 1, PST was not collected on product sales. So we're just kind of doing we're revisiting what we've done in example 1. So our assessed value of $500,000, that's $30,000, the penalty at 10%, and the interest, again, varying it just to match up with the penalties for now for simplicity's sake. So you're sitting at $36,000. A question is being asked now saying, does laid down costs include installation? And yes, it does. Laid down cost would include installation. So it's to get it up and running and ready to go in Saskatchewan for business. You're welcome. Okay, so if we're also looking at the restaurant case and a scarier scenario, with that assessed value of $500,000, 6%, if you're at a $30,000 bill, if those collections were simply just not sent in, that is a very hefty $7,500 penalty. So that's why it is so important to remit everything that you collect. The reason I focus on that or mention it a couple of times is because when I was an auditor, I had seen cases where people were not careful enough to watch their beginning and ending balances. So they would remit whatever whatever they thought at the end of the balance. However, the beginning balance wasn't zero, so that is still considered tax collected, not remitted. I'm not sure how the system did that in that case. However, it still was that way. So it's good to double check your opening balances and your closing balances just to make sure. Okay. So we're going to do this now. The PST was not self-assessed on the tables. So the auditor comes in and your $50,000 tables with your $5,000 shipping at 6%, that's $3,300. Your penalty, you didn't know you were supposed to self-assess. So it's a 10% penalty on that, which gives you $330. Your interest, again, is going to vary, but we're going to, for simplicity's sake, use the penalty amount. So rather than paying the $3,300 initially on the full assessed value, you ended up paying nearly $4,000. So the main focus of the PST consulting would be able to look at this and make sure that we have self-assessed, so there's no penalties and interest, and tax has been collected and remitted as required. So the other scenarios, both the salon and the restaurant, with their taxable sales, that would not have been an issue. Not the penalty, not the interest, and not the assessed value, because you'd already collected where you're required to. One point to make that the ministry does allow is sometimes when sales are not collected on, when taxable sales did not levy PST on those taxable sales, there is a form that some people choose to take where they can send it to their customers, basically to rebill them for the tax. Most businesses don't choose to do this just due to the fact that they feel it may make them look like they weren't doing it right, I guess, or whatever the case may be. Maybe they have a strained relationship with a particular customer, or a very good relationship that they don't want to disturb. So there is that option. However, when you're looking at things like restaurants and salons, the dollar value is quite often immaterial. So you're actually on the hook for that sales amount that tax should have been collected on, because you can't go back to all of your customers and ask for your $3 and $4 per customer. It's just not typically a logical way to be able to recoup your costs. So there's always the consideration of knowing on both sides how to self-assess and knowing what is taxable and what is not. So I hope I'm giving you enough of an overview and an understanding of what all would be affected, even as far as this restaurant example goes. Another couple things to mention on restaurants: your packaging materials, as far as your to-go containers, those are tax exempt. If you're paying tax on those, take your internal credit. And the internal credit, which was a question was asked about it just a little while ago from Janelle. Thank you for asking that. Basically, PST they don't give you a refund for the little amounts of credit. So you paid $40 for to-go containers, and they charged you the $2.40, whatever the case may be. And you just take an internal credit. You subtract that amount from the amount of PST that you owe. In this case, because it was an audit scenario, that's why it was a little different here. But in an audit, they will deal with the refunds as required at the time. But yes, little internal credits, that's what they were referring to, is things like that, like little areas where you bought packaging material or you bought straws or plastic utensils for your customers to take their food out of the restaurant, that is tax exempt. So there's both sides of the table. So basically you want to be able to understand what is tax exempt, what you need to pay tax on, and that's one area that I can definitely help you with. Or as I've mentioned throughout certain PST bulletins, that can definitely help with all of these areas too. However, I do realize there's 73 bulletins and it can get overwhelming, and that's why I'm here. So if you do have questions after all of this, by all means, I'm encouraging you to ask while we're going through it, but I am definitely open for questions after as well. Okay, so what is PST consulting? PST consulting, I assist in minimizing and hopefully eliminating all potential penalties and interest if an audit were to occur. And I prepare refunds and remittances through mock audits, ensuring compliance and preventing overpayments of taxes. So what I can actually do is sit down with your records and do what an auditor would do. So we can pinpoint if there are any areas that could be improved on. Now, I was just asked a question from Deborah. What was the internal credit bulletin number? I don't have the internal credit bulletin number. Likely, you might be able to find information on it, though, on PST Bulletin 5, which is the general bulletin that kind of explains an overall view of everything, because internal credits would apply to most industries. Okay, perfect. So the PST consulting, another thing that I am providing overall, like I mentioned, is I will be putting on a seminar, and the seminar will be about contractors and manufacturing and the changes before and after the big changes with the budget. So I will put that on, and the reason I'm going to be focusing on the before and after is if you were selected for an audit, even within the next year or two, you would still be responsible for understanding all of these rules and all the implications that are directed at your business. So I have posted on Eventbrite already, and I will be posting it on my website, christyweese.com, and I'll also be posting it on Facebook. So that's basically the things I can do for you. I can help you specifically for your industry and specifically for your business, because every business is just a little bit different. So there's definitely factors there that need to be considered even outside your own industry. So recap of the day, we know that PST applies to most product sales and many services. Goods and services used in the operation of your business are often subject to tax, to PST. And as an entrepreneur, it is your responsibility to understand your obligations in regards to PST. So in all the time I was auditing, it had never been acceptable to take the reason of I didn't understand or I didn't know, because there are online resources available to the public. It is your responsibility to understand how PST applies to your business. So that's my quick overview on PST. Does anyone have any questions? Okay. So this is my contact information. Thank you so much for sitting in on this. Thank you, Chelsea, for telling me it was a clear explanation. Perfect. I'm really glad this may have helped you or may have provided extra information. And by all means, tax exempt changes to consumables. Janelle, can I please ask you to expand on that a little? Janelle had made a comment of tax exempt changes to consumables, and I'm not quite sure what that's referring to. There are changes to consumable products. What are they now? Your consumables, the product changes would be like, are you talking the real property changes or the changes to, I'm not sure exactly what it's geared to. Because your consumables can be anything. Your consumables can be the goods and services you're buying in the province. Your consumables can be, I mean, you're not restricted to in Saskatchewan. Some people go and have their accounting or bookkeeping done out of the province. Even some franchises will provide bookkeeping services for so long or for a cheaper rate. But if they don't know the rules of the province, it can be kind of scary, and you'd have to self-assess on those bookkeeping or accounting charges. Used to be exempt all consumables before changes. Oh, fabricating. Yeah, that would be in the manufacturing area of it. So basically, we used to be exempt of all consumables before changes, and now we have changes in Bulletin 12 stating that some we can no longer be exempt from. The exemption for fabricating or manufacturing, if you're referring to Bulletin 12 and resellable products, you used to be exempt and they don't allow you to be exempt anymore, Janelle? Just for simplicity's sake and for keeping, not keeping everyone else held up, Janelle, can you by chance send me an email? And I would love to continue this conversation. Perfect. Okay, thank you, Janelle. Are there any other questions? Perfect, sounds great. Okay, well, thank you so much for your time. And if you need any other information, I just wanted to do this last thing here. This is the references that you can use to go to find those PST bulletins I was referring to, as well as the 1-800 number for an inquiry line. Again, I would be more than happy to work with any of you and your businesses. And I really hope to someday see you again. Thank you.
Wow, that was great. Thank you. I really want to give a huge thank you to Christy for taking the time to share her insights today. Your webinar was incredibly valuable to help us understand the new implications of PST in Saskatchewan. I also want to say thank you to everyone that was able to join us on this webinar. And our next upcoming webinar is The World is Open for Business, Your Business. And that is on October 24th. And our presenter is Chris Decker, President and CEO of Saskatchewan Trade and Export Partnership, also known as STEP. So please check your WESC emails or visit our website to register. So thank you, everyone, and Christy, and have a great afternoon.